if you're sending $200. The figure will go down more if you're sending more money, but 200 USD is seen as sort of a standard amount when you're looking at remittance. But when it comes to Pakistan, some of the corridors that Pakistan is part of, this development hasn't quite hasn't reached some of the corridors that Pakistan is part of. One of which is Singapore, where I am based, Singapore to Pakistan corridor. Imagine having to pay 17% out of $200 that you're sending. Again, this is exactly why we are pushing for financial inclusion. It is the poor, it is the hardworking, bottom of the pyramid population that are disproportionately affected because they don't have access to full access, and they actually pay more in order to send money, to pay, to save, as well as to plan for the future. And in Asia, there are many countries that are reliant on remittances, not just overseas remittances, but domestically as well. And Indonesia is one of them. And TPRC conducted a demand-side study with USAID outfit in Indonesia. And what we found is that 1 out of 10 adults are receiving or you're sending domestic remittances. And the frequency is average once a month, which doesn't seem like a lot, but imagine if the access to the bank requires a couple hours of travel, and if you're on a temporary job that requires you to be at the work site on a daily basis, or if you're a mother who have to look after little children, the access to the finance actually becomes a significant issue. And when you're looking at the modes in which people send remittances, Mr. Moderator has just mentioned that mobile is the most cost-effective means of sending and receiving money. But in countries like Indonesia or Bangladesh, where these are actually touted as strong countries with strong potential for financial inclusion, digital financial inclusion, the utilization rate for mobile as a remittance platform is very significant. I'd like to bring up the gender aspect of remittance as well. The picture slightly differs from country to country, but when it comes to Bangladesh and Pakistan, if I'm not mistaken, it's the man who would either go to the urban centers to work or go overseas to work and send money back. Therefore, women are the dominant receivers as well as spenders. They will decide how to spend the money and make the financial decisions for the family and the community. But when it comes to financial inclusion, women face a lot more challenges. The list goes on, but a few of the challenges that women face include social-cultural factors. In certain countries, women need the husband's consensus to travel, to own an asset, and to open a bank account, just to mention a few. So I think with this background, I hope the imperative to digitize financial access, payments, and different financial services for the poor is clear. But, again, this is from the World Bank tracker for remittances, and even the latest figure shows very clearly that online as well as mobile money are the most cost-effective way of sending and receiving money. So understanding this imperative, how would a country move forward? And the next few slides will be based on TRPC's past work, helping some of the countries analyzing the digital finance ecosystem that we've done in the last year. But the key message is that we do need to understand the digital finance ecosystem, the stakeholders, in order to strategize and plan forward on how to improve financial inclusion using digital means. So as we all know, the payment value chain, or the ecosystem itself, is more complex. And again, the gentleman here would know a lot more than I do. But it's also one of those landscapes that's evolving very rapidly. For example, before it was banks predominantly in the financial services in the space. With digital finance services, we're now talking about telcos being in the space, as well as a lot of third-party service providers that are trying to fill the gap. Therefore, developing a holistic view of who's actually part of the ecosystem, what they do, and where the gaps are, it becomes a rather complex exercise. Again, this is an illustrative example that we had to sketch out to understand what's going on in the digital finance in Indonesia. And the picture is largely similar in some of the Asian countries, but at the same time, when it comes to the dynamics among the players differ enormously across the countries. And I think that's where the real challenges lie. Another exercise we've done in Sri Lanka, and this is just looking at Easy Pay, and this diagram is already a couple years old, but even back then, and at a fairly nascent stage, it had multiple linkages to various financial services, not just to make payments, but for insurance as well as to pay for utility payments. And that means the banks as well as telcos, not only these two will have to talk, but then they actually have to include different players to make sure that this financial services inclusion fulfills its potential. But that means we also have to understand the multiplicity of regulations as well as overlaps in some of the jurisdictional powers of different government players. Okay? So this is an exercise we've done in Mongolia, again, where you see across different government players having some kind of implications if you were to set up a mobile banking. Lastly, therefore, for countries to move forward, it is a worth exercise to understand a holistic view of the financial ecosystem. And this is a scheme that TPRC has proposed for APAC during their CEO summit, which is actually happening as we speak. Is to look at ecosystem from a regulatory policy as well as infrastructure and service and demand side. I won't go into the details, and since Pakistan wasn't part of the study, I won't share details, but I'll be happy to share the report just to provide a framework on how to understand the ecosystem of digital finance. So in the interest of time, I'll skip to the final thoughts. These are very generic recommendations that we have provided in the past to our clients. When it comes to a market setting or market making exercise for digital financial inclusion, for the players to come in and to invest, policy clarity is key. I think Pakistan is well ahead of its peers and neighbors when it comes to policy leapfrogging when it comes to digital financial inclusion. If this is a space where emerging economies are doing better than advanced economies, could be partially because there's less of a legacy issues as well as institutional interest to fight against, and the developmental benefits for promoting financial digital inclusion is very clear. But again, I would like to congratulate Pakistan for forging ahead with this very important agenda. And I talked about establishing a holistic view. but encompassing all players, so not just telcos and banks. And even putting these two players in the same room can be very difficult in a lot of countries. But also insurance companies, utility companies, all the other peripheral services that can be tied to the digital finance services. So coordinating across agencies will become an important issue. And understanding that from the get-go, it is very difficult to get all the policies right. So as long as the government has a risk-based view, but understanding where the priorities lie, instead of trying to regulate everything before the innovations and the usage and the take-up actually happen, we recommend to prioritize certain elements first with a very flexible view as well as a risk-based view. So that concludes my presentation. I'll be happy to continue this dialogue.
Thank you, Ms. Yoonee. I'm trying to understand the format of the session because I have been called to fill in the blank in the last moment. So I try to manage it as I can. So 225 million, Mr. Yoonee has explained, Ms. Yoonee has explained that 255 million mobile money accounts are there in 89 countries, whereas 700 million adults have access to formal financial services. And she also explained that there is a lot of challenges to the women for the access to the financial inclusion. And I agree with her that for the effective digital financial inclusion, it requires a proper ecosystem, effective regulatory framework, and policy guidelines. Without these issues, it is not possible we can go for financial inclusion effectively and efficiently. Now I request the second speaker, Syed Irfan, who is Executive Director, State Bank of Pakistan, to give his presentation. Syed Irfan.
Good afternoon, ladies and gentlemen, and thank you, Yoonee, for a fantastic presentation. And I think I learned a lot from your presentation, and I'll take it back to State Bank of Pakistan and see what policy changes we can make. And I honestly thank the Pakistan Telecommunication Authority for this opportunity. And here is State Bank of Pakistan's rep there making a presentation on digital financial inclusion. And I'm so grateful to all of you for taking time off and listening to this. Very important. Now, digital financial inclusion, for that matter, financial inclusion is very close to our heart. And when we began working in 2008 on one-class banking, there were three things in mind. One was the ease, the other was the access, and three was the cost. Online banking has made history in Pakistan, and today we have progressed from a base of 0 to 250,000 banking agents at this point in time. So that is real progress, ladies and gentlemen. I'd like to, before I begin my presentation formally, I'd like to quote Irfan, the famous, where I did intellectual. The quote is in Urdu and I'll translate it. He said that हमें से जिंदा वही रहेगा जो दिलों में जिंदा रहेगा, और दिलों में जिंदा वो रहते हैं जो खैर मांगते और आसानियां मांगते. इसकी translation है, only those will live who live in the hearts, and those who live in the hearts are those who bring welfare and ease in life of others. The objective of the Vision 2020 of Pakistan, of the State Bank of Pakistan, is to bring ease in the life of Pakistanis, the common man, the poor man, or anybody or anyone who lives in this country and needs access to finance. And digital finance is definitely the means to do so. The contents of my presentation are as follows. We'll talk about the regulatory objectives very briefly, and we'll talk about the state of financial inclusion in Pakistan. Dr. Syed has already mentioned some of it. Then we'll talk about the State Bank of Pakistan initiatives, then we'll talk about digital technology for digital financial inclusion and the way forward. Now the first part of the regulatory objectives is to ensure provisioning of financial services to all segments of the society. Now that is done, ladies and gentlemen, without any discrimination, either on the basis of gender. The women are underrepresented as far as the total number of accounts are concerned. Then geography, there is absolutely no discrimination as far as geographic representation is concerned. Age, religion, caste, creed, whatever, these are meaningless terms as far as financial inclusion, or for that matter, digital financial inclusion is concerned. State Bank, sole objective is financial inclusion. The next regulatory objective is to ensure financial stability. I'll not go into the economics of financial stability, but it's our job to ensure that each and every financial sector that operates in this country is stable and is not a threat to the other financial sectors. Then, for digital financial inclusion or financial inclusion, we are interested to protect the depositors' interests. This is the legal mandate of State Bank of Pakistan, to protect the depositors' interests. And to protect depositors' interests means to protect his or her savings and to be able to give a reasonable rate of return to the depositor so as to incentivize saving. Then we want an efficient and stable payment system. There are a number of payment systems operating in the country. For example, the real-time gross settlement system, which is operated by the State Bank of Pakistan. Then we have OneLink, which is an ATM-enabled network. Then we have MNET. We have National Institute of Facilitation Technology, that is check-based clearings. So a lot of work. And we have recently come up with payment system operators guidelines that will hopefully be a major step as far as the digital financial inclusion is concerned. Then we have to encourage the documentation of the economy. I'll not indulge into that here. Then we want people to save. And by encouraging people to save, we need access through digital means. Pakistanis are not very much prone to saving. Our saving rate as a percentage of GDP is less than 10%, so we have to improve that in comparison or in competition with other economies. As far as the protection of depositors is concerned, State Bank runs a full-fledged consumer protection department. We are right now undergoing a transformation to conduct-based supervision, and we also have the banking officer operating in Pakistan that would help the consumers or the depositors. This is the state of financial inclusion in Pakistan. In the year 2008, financial included were only 12%, and an access to finance surveys results would be published by the end of this year says that we have touched 23%. It's an unenvious position, but we'll be targeting about 50% financial inclusion in the next 5 years. Then we have also been implementing a multi-pronged strategy, which is based on promoting branchless banking. As you already know, branchless banking is a hit, is a success story that has been followed everywhere in the world. Then we have proportionate prudential regulations for to address sector-specific risks for microfinance, SMEs, consumer finance, agriculture, and this is what I believe Yoonee was talking about. That this is where State Bank of Pakistan has taken the lead, and this is where we have been very progressive, and the objective is to facilitate financing to all segments of the society. Then we need to work quite hard on the capacity building of providers and consumers. This is a long story that will unfold as the Vision 2020 unfold for State Bank of Pakistan. The challenges that we face are common challenges that every one of us faces here, that is significant size of the informal economy, progressive banking infrastructure development in rural and remote areas. We do have electricity constraint, and having no or very limited access to electricity does pose a challenge as far as financial inclusion is concerned. Then the usage of cash is another challenge. Then complex customer experience for opening of accounts. We have just introduced the zero level or zero base account, which requires a minimum due diligence of for zero level account, the due diligence is just an ID card or just the fingerprint is taken through digital means and biometric, and it becomes accessible. So level zero would definitely improve financial access. Then acceptability and availability. The public has to come forward and accept the digital tap challenge. The currency in circulation is a bit high, that is because we are a cash-led society. Geography presents its own challenges. Gender inequality is another challenge in financial inclusion. Rural-urban divide, the urban centers tend to dominate financial inclusion challenges. And for the stakeholders, it's important that they have to consider all these business challenges with us if we are to move forward. The initiatives already does. We need to work. We have worked on the branch licensing policy, and for your information, 20% of all bank branches have to be opened in rural branch requirements. And for your information, ladies and gentlemen, the brick and mortar, about 1,000 bank branches are opened every year. And this has been going on for at least for the past 7 years. We were at about 6,000 not too long ago, but 5-6 years ago, but that has taken place. Then we have introduced sub-branches, mobile banking for microfinance banks, service centers, and each and every branch has been, the brick and mortar branch, has been mandated to have an ATM. So that is why you see an increase in ATMs. But again, it's not a very envious position. We need to improve much more on that. Then branches banking regulations talked about. We have just, if you see the ads that are coming up on the television these days, the Azzam accounts, if you see, a lot of commercial banks are marketing Azzam accounts. That is another step that we have taken for financial inclusion. Then we have a framework for microfinance banks. Pakistan, the interbank settlement system, we are working on that, but that's a large value payment system. We have the payment system and electronic fund transfer act, which primarily means that any hurdles that existed as far as e-money is concerned, that have been removed, so that this law is there to address that. And then we have an interbank card payment platform for interoperability, and the rules that I already talked about. These are the financial services access points. Ladies and gentlemen, the total number of commercial bank branches is 12,868. That is as of now. And this is, like I said, it is increasing by about 1,000 bank branches per annum. But like I said, in big cities, they account for about 54%. Microfinance branches are about 720. Total number of ATMs is 9,597. Out of these 12,868 branches, only 11,315 are online. There has been some surge in POS machines which have increased from about 30,000 to 41,000 in just a couple of years. And here lies the number of branchless banking agents, 251,000. So this figure did not exist in 2008. We did not have 250,000 access points. This is a major development that has taken place. Then digital technology that brings its own challenges and its own benefit. This is what we are looking at here. 63.3%, 64% I would say have access to mobile phone. 22 million have access to broadband. 18 million have 3G, 4G substrates. Total daily density is 65%. So this is where the real opportunity lies. And this is where we will be working very hard. And we hope to be targeting this sometimes in the year 2020, and work has already been undertaken. And this is part of the vision of State Bank of Pakistan. Now the prospective gains for anybody who wishes or who would be indulging in this exercise would be reduced cost. New customers would come up. There would be revenue diversification for high customer satisfaction and infrastructure development. And banks and world are geared toward near field communication payments and usage of biometric mechanism for accountability. That's the one that I just explained. The zero level account with minimum due diligence, just a biometric verification, and that's it, and here you go. The way forward, ladies and gentlemen, is the 2015, we call it the 2020 strategy. This gives out the national vision. You can go through it on our website. But we are currently targeting adult accounts to at least 50% of the population, and female accounts which are only 22.9% at the present to 25% in about 5 years' time. For this, I come to the last slide of my presentation. This is where the future lies, ladies and gentlemen. One is the biometric technology, then the second is the SDP and the PTA coordination, and third is the awareness. Biometric technology is there. Accounts are being opened using biometric technology. We are in coordination with PTA, and in fact, when we developed the branchless banking regulations, that was done in collaboration with PTA and Ministry of Information Technology at that time. And the last challenge, obviously, is awareness. There is an awareness campaign going on through the banks, as you are witnessing the Azzam account advertisements, and not only that, State Bank of Pakistan staff is visiting universities, colleges, schools, villages all over Pakistan so as to bring in maximum financial inclusion, and we would continue to do so this year as well, and we continue till the year 2020, and that's the time we will reassess our strategy and to see what have we achieved, and then we'll go forward. Thank you so much.
Thank you, Mr. Irfan. State Bank is the oldest bank in the history of Pakistan, which has played a vital role for the expansion of the mobile banking in the country. Mr. Irfan has mentioned in his presentation about some regulatory objectives and also described the challenges faced by State Bank and the country itself, including progressive banking infrastructure development, acceptability, and availability. Now I would request Mr. Yahya for the presentation. Before that, I just want to say a few words that Easy Paisa has made revolutionary changes in the history of mobile banking by introducing branchless banking in the country. This was an exactly exercise which has been adopted by the several other countries, and I have no doubt to say this credit goes to Mr. Yahya, who actually played a vital role in the establishment of Easy Paisa and OTC culture in Pakistan. So I request Mr. Yahya for the presentation.
Is a country rich with people from diverse cultures and beautiful landscapes, having inspiring ideas and determination. With the goal of financial inclusion for the millions of unbanked people residing in the country, Telenor Pakistan, in collaboration with Microfinance Bank, launched Easy Paisa in 2009 as the nation's first mobile banking initiative. Anyone can use Easy Paisa services either through over-the-counter transactions by visiting their nearest Easy Paisa outlet or through their mobile phones using mobile accounts. Easy Paisa has always taken pride in its vast portfolio of life-changing products like bill payments, sending or receiving money, giving donations, making payments, repaying loans, purchasing airtime, ATM cards, and more. In addition, Easy Paisa has set a benchmark for innovation in the market with groundbreaking new products like micro-life insurance, micro-house insurance, savings options, solar leasing in off-grid areas, handset financing, and retail payments. Easy Paisa has also been working closely with the government and NGOs, disbursing more than 14 billion rupees to over 1.7 million deserving beneficiaries, spanning programs like healthcare, income support, educational stipends, pensions, and social welfare. Since 2009, nearly 50 million people have used Easy Paisa services and have carried out over 300 million transactions. Easy Paisa now serves 15 million active customers through more than 65,000 retailers across 800 cities. Easy Paisa continues its extraordinary journey of innovation to achieve financial independence for the masses of Pakistan.
Okay, ladies and gentlemen, Bismillahirrahmanirrahim, Assalamu alaikum. Thank you, Dr. Salim, very fine words, and my fellow panelists. I just thought, given the 15 minutes, it'll be a good intro, the video that we just played, of the overall branch-based banking industry in Pakistan. And we don't shout about it as much, but we're very humbled and honored when we actually stand in front of you. And when I say branch-based banking, I include Easy Paisa. That's the advantage of Ghazanfar of going before you, that I can include this everything. Easy Paisa and similar branch-based banking services, actually this is the third best and the third largest mobile money service in the world. We don't talk about it as much, and I think this is also the service where the GSMA and the Wall Street Journal and the CNN, when they talk about financial inclusion and the digital innovation that is taking place, credit goes to people like you, credit goes to the regulators, both the telecom regulator as well as the financial regulator, as well as the telco players and the banking players, for actually bringing it to the stage where it is in. So, we have talked about the scene setting. You've heard that how Pakistan at the time in 2008, less than 14-15% of the people had access to formal financial services. That number is improving to just under 25%, as we just talked about. We think that poverty can be alleviated through the financial inclusion, and that includes everything. And sometimes we talk about over-the-counter versus mobile accounts, and we get into that level of discussion, which, if you ask me, I think back in 2008 when we launched the over-the-counter service, that was the right decision. That was the right decision because we wanted people. It would have been a huge leap of faith for people. We heard from Irfan Sahab that Pakistan is a cash-based economy. It would have been a huge leap of faith from people, asking them to move, then skip the whole generation and go straight into mobile wallets. Trust the digital money, convert their physical cash into digital cash, trust their financial numeracy skills and be able to conduct the transaction themselves. Having taken 5.5 years now, when people really trust these services such as Easy Paisa, MobiCash, TimePay and other services together, we are serving about 16, 18 million customers on a quarterly and a monthly basis. Now people have started to trust these services. Now is the time to really push the mobile accounts. It wasn't before. And I'm happy to get into any discussions that people wish to get into. We also believe that whatever we do, if we do it with a cause, it has an effect. It has a more profound effect than just adding the numbers. And we believe that we are not just selling financial services. We are in the business of changing lives. I wanted to highlight some of those key things, but I'll just pick up a few things that I haven't talked about. So, just Easy Paisa alone moves about, this year, we're going to move about just shy of 700 billion rupees of throughput. $7 billion. That is a huge machinery which is working behind this whole digitization of cash. The whole money transfer, the bill payments, the transactions that happen on mobile accounts, the corporate disbursements, the salary disbursements, the donations, the P2Ps, you name it, is a whole machinery that is working in the whole of the branchless banking industry that is making it happen. That, ladies and gentlemen, make no mistake, this is significantly more cash throughput that is being converted into digital than any of the industries. Which is why the previous presentation, when we heard about the 250,000 financial access points, also referred to as retailers, that's what these guys are doing. That's why the financial access points of 250,000 is so important. The other thing, Irfan has talked about it, I wanted to just mention this, I'm sorry, should I have moved? Yes. I want to talk about the bottom right, which says dial a string thing. So, if you think about it, why in 2008 Easy Paisa and then subsequently similar services thought about launching these branchless banking services? The stage was set. So we just heard the tele density in Pakistan, 65%, slightly lower at the time, and the financial access was less than 15%. So we had distribution access to people where we could have distributed the financial services products. That was it was a perfect storm that was waiting to happen. The string that I mentioned was the stroke of genius by, again, I give credit where it's due, by the regulators. When the whole country went through the biometric verification, the telco and the financial regulator got together, as well as the rest of the industry, and we said, wouldn't it be nice if we could open a level 0 basic bank account on the back of a biometric verification, where all of Pakistan has gone through the same biometric verification. And that's where this thing came in. And that's when this huge surge since February or March of this year in the number of mobile accounts that you see. The challenge that we have as players now is to make sure that people who are, and although this is significant that now people are dialing the string themselves, meaning they're not missold or forced to open an account. They are themselves dialing a string and they're active people. Yes, the challenge remains on the industry to make them even more active. If they're doing 1 transaction a month, they should be doing 5 transactions a month or 10 transactions a month. But that is financial inclusion. And which is why, as I said at the start of the conversation, the stage is right now, because the legal and the regulatory framework is perfect to push those. Okay, so I don't think you've got, I'll just talk it through. So, the other products, so starting off with the basics of money transfer and the bill payments. And then moving on to some of the products that you heard about, the international remittances that you heard about, it's very important. Right now, again, large channel through which these international remittances come into Pakistan is still physical. It could be mobile, and the progress has been made. Then really moving on to the real financial inclusion products, such as savings. In no time, this industry has raised over 3.5–4 billion of consumer deposits. Consumers trust this service. They trust the regulatory environment and the service providers that are behind it. Then the game really changes when the cost of deposit of raising money from this service is a fraction of the cost of deposit from the brick and mortars. That's where the lending rates start to go down. Then payments. We talked about the NFC and the online payments. Online payments is a huge space. In the neighboring countries, it's in billions of dollars. We're still languishing below $100 million. One of the reasons is that people not everyone has access to internet, and not everyone has access to be able to make a payment on the internet. And if these services with their 250,000 financial access points come into this game, this changes the game of online payments. We also heard about how the retail payments industry is so cash intensive, and if the NFC or other modes of digital payments come into this space, and this whole embedded cost of cash-based economy starts to go down, that's where the game starts. Then we heard about, then insurance is another product. If branchless banking services have access to these distribution access, why is it that Pakistan still has less than 0.5% of insurance penetration in Pakistan? Why can't this micro insurance be distributed better? Again, we have started both life and health insurance services for that. So, and then let's not forget the whole G2P cash disbursements that happen. And also now these branchless banking services have started to come into G2G services. When a person has to make a payment, whether it's for ticketing, license fee, traffic violation tickets and everything else, again, we need to be able to use the distribution footprint that we have, and the power of mobile wallets has to come through. So in the end, if I just summarize the key items which are vital for this digitization or the financial inclusion. OTC, as I said before, was the right recipe at the time. It introduced people to digitization of money, albeit it was the first step of getting into the digital ladder or the financial services level, which was the money transfer and the bill payments. Now, those financial access points could be a vitally important feature for us to do cash in and cash out into the mobile wallets. And now that people have started to warm up to savings, lending, insurance, payment services, now is the time to really push in collaboration with the regulators about these 4 pillars that I just talked about. Thank you, ladies and gentlemen.
Thank you, Yahya. Government of Pakistan has developed National Financial Inclusion Strategy. And the target of these strategies are 50% adult or 60 million people with digital transaction account, including mobile wallet account by 2020. To promote access to financial services in rural and unserved areas. ICT and broadband is identified among the main pillars which will enable such proliferation. And PTA is part of the Council and Steering Committee of NFIS. Now I will call our last speaker of the session, Mr. Ghazanfar Azzam, to give his presentation.
Distinguished panelists and ladies and gentlemen, good evening and Assalamu alaikum. Being the last speaker in any session has its advantage also and disadvantage. The disadvantage is that all the things that one wanted to say have already been said, perhaps. And advantage is that level of understanding and the context is more clearer. So probably I need to focus on a couple of points instead of focusing on the entire subject of financial inclusion, which has very ably been dealt with the distinguished speakers that came before. Therefore, I'll be skipping some of the slides, starting with the context. When we say financial inclusion, sometimes we tend to think that it is a very straight, simple situation that we can describe by merely describing or saying, mentioning a percentage, that this is the state of financial inclusion in any economy or any country. But if you look into it in more detail, so financial inclusion has several aspects. The most basic, of course, is in countries like ours is access to savings. If you go to the next, savings outreach. How many people have access to have a basic savings account? Call it mobile wallet, call it Asan account, call it a simple savings account. So this is probably most of the studies mention about financial inclusion or access to banking or access to finance. They quote the ability or availability of service in terms of savings. So in our context, it's only about, if we look at what World Bank index says, it's about 8%, 8.7% of the adult population. Now we have other figures also, which have been mentioned that in 2008 it was, generally speaking, it was about 15%, which is 0.3%. So that primarily talks about savings access. If you look at the access to credit, the situation is more frustrating in the sense that in a population of say 198 million, we have roughly about 3 million bank borrowers. And we have 3.5 million microfinance borrowers. So this makes the total of 6.5 million borrowers in a population of 198 million. And if we talk about eligible borrowers, even then the access to finance is still in the single digit. So in savings it is relatively better, but in terms of loans or credit, it is still in single digit. Then there is another important service that our product, which all over the world, I mean, that is considered essential to our requirements, anybody's requirement, any family, any individual, that protects our future, protects us against hazards and risks that life has in it, and that is insurance. So if you look at insurance, the coverage is even more inadequate. Only about, if you look at numbers, this is 6 point something? 7.8. 7.8% people have eligible people have access to insurance. So if you look at all three, the picture is still pretty unsatisfying. That we have to go a long way in terms of providing these basic financial services, which are savings, which is credit, which is insurance, to the majority of the population. So that is unfortunately the state where we are. But if you look at where we were 5 years before, or 6 years before, when State Bank of Pakistan took several new initiatives, and PTA also partnered with State Bank of Pakistan in these initiatives, when the branchless banking and mobile financial services and all of these new channels were initiated, the situation has obviously improved. But as previous speakers have also mentioned, our goal is from here to go to the 50% coverage by 2020, which is the goal of the financial inclusion strategy that has been warned by Government of Pakistan also, as proposed by State Bank of Pakistan. So 50% coverage is a decent goal that if we get there, so at least we will be able to take some pride in the fact that at least 50% eligible population is covered now. But again, the ultimate goal is to basically go to the 60 or 70% of the population. Everybody who has a cell phone ultimately needs and of course deserves to have access to the basic financial services. So if you go to the next slide. If you look at tele density as figures released recently by PTA, we say that 137 million, cell phone holders are there, out there, and they are served to about 240,000 agents, which are also now mobile financial services agents in the market. Now, this branchless banking model has gotten to a stage where we are offering primarily very basic services, OTC, which are money transfers, small money transfers, and also collection of utility bills. These are the two basic services that comprise bulk of the transactions that take place in the market. As Yahya said, going forward, our challenge is how to use this channel for offering more meaningful and more important services, which are savings and of course at some stage loan products and insurance products. Insurance products have been tried, but insurance products somehow so far have not made that much impact as obviously OTC and savings have done. If we talk about these 240,000 agents, primarily these agents are doing performing the function of human ATMs, cash in and cash out. So I believe this is also transitory. Going forward, these human agents have their advantages, pluses, but also some disadvantages, and as far as providers are concerned, the industry is too heavily dependent on this agent network. So therefore, ultimately I believe we need to go to the next level where we reach out to all those people who have cell phones through cell phone. The ultimate distribution is cell phone, and these 50-70 million people within the larger circle here who are still untapped, and even those who have become part of the system, they start making use of the cell phone for savings, for transactions, and mostly for credit products also, when providers are able to develop credit scoring models and programs that can cater to the small ticket lending at a very large scale. So I believe this stage where we are is still transitory, and the next stage is where the ecosystem develops, where everybody who has a cell phone has basically the cell phone is your bank, and every transaction, every financial transaction you think of is basically made through that transaction. So that's the destination that I think all of us need to work, and in the next 4 or 5 years we should focus on. The next one. So when we say how we will get there and what are the financial products and services that previous time. So all of this, these initiatives that are at the moment, being pursued, branch-less banking and MSME finance, microfinance, rural finance and agricultural finance, housing finance that we need to pay more attention to, particularly housing finance for the low-income segments, and of course insurance and other products. All of these products need to now become part of our strategy, that people should have access to affordable products, not just transactions, but also savings, also insurance, also credit. And the nature of industry, I believe, is also going to change. The way we do business is also going to change. The branches, I think entire banking at some stage is going to be, next stage. We are getting to a stage where traditional brick and mortar branches are probably not going to be there, or their role will be entirely changed. So what will be the role? New role. There will be what will be the key elements in the new model? Of course, as I said, cell phone is the most important one. All of us already make a lot of use of cell phone in terms of making our normal transactions, in transferring money, in maintaining our savings and current accounts, in transferring money to maybe locally, or even we can make now, by using internet on phone, we can make international payments as well. So smartphones are going to be the principal distribution channel, along with ATMs, which will be replacing human agents that we have in the marketplace, and call centers will be increasingly handling service, and branches which at the moment have large operational factories. These factories will move back to some central-based call centers and operational facilities at head office. But branches will primarily become sales centers, sales and service centers initially, and then sales centers where you use them basically to get your acquire new customers. Processing, account opening, archiving, all of these things are going to move back to the back offices, and nature of branches will change. The branches will be more interacting with customers, and then will not be operational places anymore. So I believe call centers, smartphones, ATMs, and the new role of branches will be the major elements of the new financial services model. So the entire banking is moving towards a new way of doing basically business and transactions that we do. It is changing from the way we have currently done business, and it depends. Ecosystem is under development. How soon we are able to actually plug all of these pieces together, and we are able to offer better products at lower cost and at fast pace. So these are the ingredients of the new model that I believe is going to evolve. So thank you very much. And if there are any questions, we can take it on. Thank you.
Thank you, Mr. Ghazanfar. All the speakers, actually, we have heard all the speakers. They have discussed the different statistics, their strategies, their challenges for the financial inclusion. Now we need to look into what is the way forward. So efforts are required for customer awareness, for widespread adoption of digital financial services. National strategy for financial inclusion provides a coherent approach to provide an enabling environment for the expansion of mobile financial services and digital financial inclusion. However, effective implementation of NFIS needs to be ensured by all the stakeholders. All the stakeholders need to work together to accelerate the expansion of M-banking network to the unbanked and rural areas and increase the use of mobile financial services in the society through interoperability and replacement of daily cash transactions. So now the house is open for the question-answer session. We have 15 minutes for this. So I will request the person who has the question introduce himself and also point out the speaker to whom he has the question.
Thank you very much. Thank you, presenters. I'd like to call out one thing that I feel is missing in all the 4 presentations. And I think only saw it in Yoonee's slide as one word. It's about cryptocurrencies. The fact that Bitcoin-like solutions will completely eliminate a lot of the middlemen that we have basically been talking about. I have not heard anything yet from both the State Bank and the other service providers in terms of how would you assist or help and make Bitcoin or cryptocurrencies available across the board, because it changes how you consume financial services. Remittances, for example, you don't have to worry about a 20% surcharge. There's no charge, or the charge is so low, it's negligible. So I think that's something which would be useful to be addressed, since you are going to be leapfrogging a whole segment of the population to get into digital and finance-related stuff. It might be useful to think differently so that you can force the issue out instead of taking the traditional path, which a lot of other countries, even the country I'm from, going down, internet banking and stuff like that. Let's be bold and see what else can we do, what is happening in the horizon right now in terms of financial opportunities. So cryptocurrencies, I would strongly suggest something that you seriously consider. So it's more of a request, and if you get a response, I'm happy to hear. Thank you.
I'd like to respond to that. Yes. Can you hear me? I'd like to respond to that. We have, in fact, undergone over the past 2 years, we have evaluated the Bitcoin prospect, State Bank of Pakistan. And right now, we are not of the opinion that we would go and take that route, not now. And for a very obvious reason, and that obvious reason is that we need to protect the depositors. That's our mandate under the banking company guidelines. So there are no such provisions within the law also. I really, being a conservative regulator whose job is to protect the depositor, I have to ensure that the depositors get some return as well for the amounts they have invested in financial institutions. I find this concept very difficult to fathom at this moment in time. So there's a debate currently going on in the State Bank of Pakistan, but I would not call it an advanced level debate. But yes, it is being looked into, but with quote unquote, with a lot of apprehension.
So that's the regulatory angle, and obviously the Bitcoins have to be regulatory approved first in order for them to be legitimately circulated in cash in the country. From the players' point of view, we have looked at the Bitcoin proposition too. So certainly, as you're saying, sir, about the international remittance and the use of it. And I think their only use case so far works on international remittances. Because you'll have to buy the Bitcoins somehow. And those people who are already banked have the means of buying them online. However their online inventory is managed. I'm not going to go into that. But you need to be able to buy them somehow. Domestically, In order for us to set up a system where a person can go to any of the 250,000 outlets and buy a Bitcoin, we're some years behind that. You were right in referring to international remittance as one of the first test cases to be able to do that. One thing I would say on that though is, remember, and I think Bitcoins are working well, international remittances is the real use case also. But when the money lands digitally, it doesn't really matter in what form the money is landing in. Whether they're landing into a Bitcoin form or into a 1 or a 0 binary or a digital format, as long as it's landing digitally into an account, operators can still decide to waive the fee on it. Yeah, so it's just the form. I'm not too worried about the form of it. I think it's the nature of the transaction.
Just like to provide a bit of a context in which where we included cryptocurrency. When we were looking at ecosystem, we wanted to make sure that the ecosystem is future-proof. And gentlemen from Bank of Pakistan as well as Pesa have put it very aptly where the debate as well as use case for Bitcoin is currently. We've interviewed a few cryptocurrency players who are filling in some of the gaps, not all the gaps, but some of the gaps in very selected economies, including Philippines, Indonesia, Hong Kong, and Australia. And we thought it would be important to include some of the emerging technology, as Harish put it, over the horizon technologies, because the payment in the payment space, the players as well as technologies have changed quite rapidly. And one of the things that I didn't mention before, but we're talking about internet companies such as Google and Facebook and Twitter getting into the commercial and money transfer business as well. And we would normally think them as a development players, but because of their reach and their financial backings as well as infrastructure reach that they have, could actually make a difference. So again, this was all in the context of looking at ecosystem, but also down the line. I think cryptocurrency as a major player in digital financial inclusion may be still in a very nascent stage and in a very selective market.
Hello, I'm Ghazanfar from Indonesia. I quite like the last speaker, how Waseela breaking down the savings versus the credit gap. And I'm wondering if you've considered the use of mobile data analytics, especially reload values, which in Brazil and a couple of other countries are being used to develop really good proxies for creditworthiness of people, including very poor people. Nascent stages, not at scale, but the research is quite sound. This is something we're trying to do because the credit gap is what will hit you next, really, because the savings gap will be solved if mobile financial services start being accepted. That's my comment. The question is for the speakers from Telenor and Waseela. What are the market shares of the different platforms? And I'm trying to understand if there's cross-operator payments possible, and if not, what's stopping it? If there's one dominant player, which sounds like there seems to be incentive to allow cross-operator payments. Why is that not happening? It's not happening.
Let me answer the first part and then Yahya can answer the second. As far as using the database of telecom customers and deploying analytics and figuring out who are creditworthy customers is something that we have been looking at constantly. One issue with data is that data quality and what kind of data is available. I mean, that's an issue that we are trying to struggle with, that how does it help us, how can it help us in actually designing products that are in for the mass market. I mean, if say an operator has support us in terms of repayment behavior. So this is something that we are looking at. I'm sure, I mean, Telenor and then that they are also looking at this proposition. But it is at the initial stage. And data quality, I mean, in terms of profile of customers, the repayment behavior, to what extent our systems capture that data is an issue.
Just 2 cents on the first part as well. So yes, we've actually already started doing micro lending. We started with device lending first, using the proxies of the customer transaction behavior. We've combined the GSM as well as EasyPass's own transactional behavior, and now we're trying to incorporate the social media behavior there as well. On the second part, the interoperability or cross-pair transactions, they happen. So we're all now interoperable, and thankfully we were also blessed with a very workable payment switch in Pakistan, which is OneLink. So what the operators did, they all joined into that payment switch, which already facilitates interoperable transaction, and it was doing it across all the other retail and commercial banks. And now the telcos have also joined that switch, so the payments flow.
Good afternoon all. This is Fajar Mohammadi. I've been working in the field of basically IPGRC, government risk and compliance is my area, and specifically security and investigations and fraud deterrence. I've been working with multi-sectoral environments. We've talked about inclusion of financial, specifically through use of ICTs, obviously which is need of the day and well explained. Biometrics, yes, we agree that that was mandatory, and we've achieved that, and we're improving on that as well. It's so far exciting, the fingerprints, and